For Section 16-1, we are preparing an income statement for a merchandising business. So an income statement is one of our financial statements that we prepare at the end of every year. So this is something that is used by investors in this situation, but it's very similar to the balance sheets that we prepared for a proprietorship in Chapter 7. So in addition to the balance sheet and income statement, we are also going to prepare a statement of stockholders' equity, which is specific to a corporation. So here is our adjusted trial balance on the left and a completed income statement on the right. That is what we're going to prepare in Lesson 16-1. You'll notice that all of the numbers being used are from income summary and down on our adjusted trial balance. In addition, merchandise inventory, that's higher up in the adjusted trial balance, but income summary and below is included in the income statement. So we are going to break up the income statement into multiple sections. So we are going to have an operating revenue section with the ultimate goal of calculating our net sales. So operating revenue, that would be the revenue earned from normal business operations. So if we are selling t-shirts, it'd be the revenue we earn from selling t-shirts. That'd be the operating revenue. Net sales is sales of those t-shirts minus any discounts we give and any returns that we would have. So here's an example of our operating revenue section on the income statement. Our 3-line heading, that's the same for all statements, always the company name on the first line, the name of the statement on the second line, followed by the date on the third line. Then we have our operating revenue section. So title of the revenue accounts, so for us it's sales, and the balance from the adjusted trial balance. Then we're going to subtract the contra accounts, sales discount and sales returns and allowances. Those balances coming from the adjusted trial balance to ultimately calculate our net sales. Our next section is the cost of merchandise sold. So cost of merchandise sold could also be known as cost of goods sold or cost of sales. So this is the cost of the merchandise we're selling. So if we're selling t-shirts, what is the original cost that our business had to pay for those t-shirts? When you find the operating revenue and subtract the cost of merchandise sold, you are calculating the gross profit. So that is what we are going to calculate in this section. So we have our heading, then we have our merchandise inventory amount from the beginning of the year, so January 1st. That will be given to you in the instructions. Then we're taking our purchases less any purchases, discounts, returns, and allowances, subtracting those amounts from our purchases to give us net purchases, which tells us the amount of merchandise that we have available for sale, how much we started with, plus how much we purchased, minus any discounts or returns. Then we'll subtract our ending amount. That amount is going to come from the adjusted trial balance, and that gives us our cost of merchandise sold. Then we'll subtract net sales from the cost of merchandise sold to calculate our gross profit. You might notice that we have some percentages over here along the right. All of these are divided by net sales. So net sales divided by itself is 100%. Cost of merchandise sold divided by net sales, 41.2%. And same for gross profit. This vertical analysis or up and down analysis, everything is being divided by net sales. Now we need to calculate our operating expenses. So as with operating revenue, these are expenses incurred by a business for normal operations. So selling our t-shirts, what expenses do we have? After we calculate this, we will come up with income from operations or operating income. So we have all of our operating expenses listed out, balances coming from our adjusted trial balance. Calculate our income from operations by taking our gross profit minus total operating expenses. Then we have our last section called the other revenue section. And this includes other revenue outside of our operating revenue. So another way that companies can make money is by charging interest for a notes receivable. So we may charge a little bit of interest and make some money, but that's not our business. Our business isn't loaning money, but we do make some money off of interest income. So that is included in the other revenue section. Then we calculate our net income from before federal income tax, which is our income from operations plus any other revenue. Then we'll subtract our federal income tax expense and calculate net income after federal income tax. Once we've calculated that, we will have a double underline to show that we have completed the income statement. Finish off anytime you have a number in the far right column. You need to also have a percentage of net sales. So everything divided by net sales. And that is section 16-1.